Today, we're taking a deep dive into a really fascinating company, the Indian Energy Exchange, or IEX. For years, this company has been a classic compounder stock. High growth, amazing margins. But right now, this market darling is under siege, facing a single threat that could challenge its entire business model.
So here's how we're going to break this all down. First, we'll set the scene. I'm calling it the fortress and the siege. Then we'll look at the bull case, what made IEX such a powerful fortress in the first place. After that, we'll get into the bear case, the big threat aiming to tear those walls down. And finally, we'll wrap it up with a verdict and point you to the one key factor you absolutely have to watch.
Okay, let's get into it. This is really the story of a dominant market leader facing what could be an existential threat. It's a classic business showdown, dominance versus disruption. Honestly, this one chart tells you almost everything you need to know. That smooth blue line, that was IEX's life until recently. Just a steady, predictable, beautiful climb. But then, you see that sharp, jagged red line? That's the moment the music stopped. It's when a major regulatory cloud appeared on the horizon. And boom, volatility hit. This is the whole drama in one picture. So to really understand why that red line is such a big deal, you first have to appreciate the incredible fortress that IEX had built. So let's dig into the bull case and look at the moat that made this company so darn successful. The entire bull case for IEX really starts with this one huge number, 85%. In India's power exchange market, that isn't just leadership, that's practically a monopoly. Everything else is built on this foundation. Now, what's so powerful is how that market share translates into some truly golden fundamentals. You have the 85% dominance, of course, but you also get these insane operating margins, consistently over 80%. On top of that, a zero-debt balance sheet, which is just rock solid financially. And the fourth pillar, a network of over 7,000 participants. We're talking about all the major power generators and big industrial users. They're all on IEX's platform. These pillars all reinforce each other. But, a strong fortress can't just sit there. And this slide shows how IEX has been trying to future-proof itself. It started out pretty much reliant on one product, the day-ahead market. But look at the pivot they're making. They're building a whole ecosystem of products. And why? Well, to grab a piece of India's massive 500-gigawatt renewable energy target. This wasn't just a smart move. It was a necessary one. And this isn't just some plan on a PowerPoint slide. The results are already there. Back in 2021, it was all about the legacy business. But fast forward, and the picture looks way more diversified. You've got the real-time market, which is absolutely critical for managing renewables like solar and wind. And you've got the Indian Gas Exchange, which is a really smart hedge against any potential issues in the power sector. These are real new growth engines. So what's the secret sauce holding all this together? What's the real moat? Well, it all comes down to something called the flywheel effect. It's a classic network effect, and it's incredibly powerful. It works like this. More buyers and sellers on the platform means more liquidity. More liquidity means better, more efficient prices. And guess what? Better prices attract even more buyers and sellers. It's a cycle that just keeps feeding itself, making it almost impossible for a competitor to break in. All right, we've seen the fortress, and it is impressive. But now we have to talk about the giant siege engine that's being rolled right up to its gates. This is the bear case, and it all comes down to one big regulatory threat. And that threat has a name, market coupling. Let me break it down for you. Imagine if all the buy and sell orders from the BSE and the NSE were all sent to one central computer, and that computer set the price for every stock. That's basically the idea here for power. It would aggregate all orders from all exchanges to find one single price. And that is the absolute core of the risk to IEX. This diagram shows you exactly what's at stake. On the left is the world today. IEX is the king. Its platform is where the price is discovered because it has the most liquidity. But in the proposed world on the right, IEX becomes just another pipe, feeding its orders into some central black box that spits out the price. This move would essentially take IEX's key service, price discovery, and turn it into a commodity. And if that core advantage gets neutralized, what happens next? Well, the floodgates for competition swing wide open. You've got rivals backed by heavyweights like the BSE just waiting for a chance. This could easily spark a race to the bottom on transaction fees. And just look at the chart on the right. Even a small 10% or 20% cut in fees would take a massive chunk out of those beautiful 80% plus margins we were talking about earlier. And make no mistake, the market has already reacted to this. This isn't some far-off theoretical risk. On the left, you can see IEX's operating margins have stayed rock solid. But on the right, look at its valuation, its price-to-earnings multiple. It has been absolutely hammered compared to its 5-year average. That gap, that's the market pricing in its fear about this exact regulatory threat. So where does that leave us? On one side, you have this incredibly strong business with a massive moat, and on the other, you have a huge regulatory sword hanging over its head. How do you weigh that risk and reward? This slide perfectly captures the dilemma, doesn't it? It's a balancing act. You're weighing IEX's powerful liquidity moat and its tech against this heavy uncertainty from regulators. This is why our source material doesn't give a simple buy or sell. It calls this a selective accumulate. Basically, that means it's an opportunity, but only for investors who get the risks and have the stomach for what's going to be a pretty volatile ride. So what's the bottom line? Well, it all comes down to one single event. Look at this timeline. The one date circled here is the only one that truly matters. It's the upcoming report on market coupling from CERC, India's Central Electricity Regulatory Commission. That report is going to provide the final answer and end all this uncertainty, one way or another. So, if you take just one thing away from all of this, let it be this. The story of IEX today is, at its core, a high-stakes battle between a dominant, powerful business moat and an equally powerful regulatory force. And that leaves us with the one question that will define IEX's future, the one everyone is waiting for an answer to. Will that incredible liquidity moat, built over so many years, be strong enough to win against this regulatory siege? That is the billion-dollar question.